Right now, nearly $1 million is riding on a bet that sounds boring but could reshape your mortgage, your savings, and every financial decision you make in 2026. Polymarket is like a stock market for news events where people bet real money on real outcomes. Today, we're diving into a market asking whether the Federal Reserve will cut interest rates even once during 2026. If you bet yes and you're right, you make money. If you bet no and rates stay flat or go up all year, you cash in. Simple as that. Let's break down what the smart money is telling us. Right now, yes is trading at 26 cents on the dollar. That means if you bet $100 on a rate cut happening, you'd win $374 if you're right. But here's the kicker. Only 26% of the money thinks it'll happen. The crowd is saying there's a 3 in 4 chance the Fed keeps rates unchanged or even raises them throughout 2026. Now, this probability has been rock-solid stable. We're talking 26.5% today, 26.5% a week ago, 26.5% a month ago. That kind of stability with $972,000 in volume, that tells us something. This isn't some wild speculation or emotional trading. This is cold, calculated conviction from people putting serious money where their mouth is. But here's where it gets interesting. The market is essentially betting that the Fed will be in hold or raise mode for the entire year of 2026. Think about that. 12 months, 12 Federal Reserve meetings, and the crowd thinks there's only a 1 in 4 chance they'll cut rates even once. So, what does the market know? First, they're looking at inflation expectations. If inflation stays sticky above the Fed's 2% target, cutting rates would be like throwing gasoline on a fire. Second, they're betting on economic resilience. Rate cuts usually happen when the economy is struggling, but the market is pricing in continued strength. Third, there's the political factor. Fed independence means they'll prioritize price stability over political pressure. But here's what the market might be missing. Economic cycles are brutal and unpredictable. We're talking about 265 days from now. That's almost 9 months where anything can happen. A banking crisis, a geopolitical shock, an unexpected recession, or even just a series of weaker economic data could flip the Fed's entire playbook overnight. History shows us that when the Fed starts cutting, they often cut more than anyone expects. The question isn't just whether the economy stays strong, it's whether it stays strong enough that the Fed never blinks once in 12 straight meetings. The other wild card, global economic pressures. If Europe, China, or other major economies stumble, the ripple effects could force the Fed's hand, even if domestic conditions look solid. Markets are interconnected, and the Fed doesn't operate in a vacuum. Our model puts yes at 26%, almost exactly where the market is pricing it. That gives us a negative 5% edge, meaning the market is slightly overvaluing our position. Here's why we're still going no. First, the economic fundamentals supporting higher rates remain strong. Employment, consumer spending, and corporate earnings are all showing resilience. Second, the Fed has explicitly communicated their commitment to keeping inflation in check, and their credibility depends on following through. Third, even if economic conditions soften, the Fed has other tools and might prefer to wait and see rather than rush into cuts. Our confidence level is 2 out of 5 stars. This isn't a slam dunk, it's a close call with thin edges, but we're going no. This is our first official prediction on Polymarket Pulse, so subscribe to track our accuracy from day one. We're building our track record in real time, with real money markets and complete transparency about our wins and losses. Before we wrap up, everything you just watched is for information and entertainment only. This is not financial advice. Prediction markets involve real money and real risk. Only trade with what you can afford to lose. We analyze probabilities, not certainties. Even an 80% market loses 1 in 5 times. Always do your own research. Subscribe and hit the bell. We post daily market breakdowns on the events that matter most. Comment below, are you going no with us or fading our call? And check back in 265 days to see if we nailed it. This is Polymarket Pulse.